Yeah, hello, good evening, traders. Yeah, welcome back to this second episode of our beginner trader series. This is Q coming to you again. So, where we left off from the last time, uh, we were talking about who actually gets to own these markets, or we were going to proceed with trying to understand whoever owns these markets. And like us, as trying to say, we do not necessarily mean that these guys are actually owning the market, you know. But what you're trying to say is that they're responsible for the structures, they're responsible for holding or organizing the overall structures of the market, you know. So within them, we do have we do have a bunch of uh, you know exchanges for various markets. For instance, if you could see, we do have the Intercontinental Exchange, which is responsible for the New York Stock Exchange, you know, and the Euronext. So all these things are public information. You can always come out here and try to make research about anything that you would want to know about. For instance, if you type in NYSE, it's going to bring you the overall definition, and that is the New York Stock Exchange. So they're trying to tell you here that the New York Stock Exchange is where companies raise capital that they use to shape the future. As we've grown, this is more of like their brief, overall understanding. And out here, you could get the Google explanation. The New York Exchange is an American stock exchange in the financial district of Lower Manhattan in New York City. It is the largest stock exchange in the world by market capitalization. So here they're giving you their headquarters, wherever it's located, and everything that's kind of like trying to affiliated with them. Out here you can see its overall market cap as of January 2023. So it has a whopping net worth of close to 22.649 trillion US dollars. You get, so it's really huge. So out here you can also come and try to understand like what is it used for, you know. So they're telling you it's the biggest marketplace in the world for investors to buy and sell shares of stock. You realize this is the explanation I was trying to give last time. We do have the New York Stock Exchange and Euronext. So the very first ones, these two, are majorly uh, within the overall realm of trying to, manage uh, the stock market. You understand? But then we do have the foreign exchange market. So for the foreign exchange market, we do have what we call we do have what we call um, the Chicago Board of Trade. So out here, I'm going to have some space where I can help explain most of these things. So we're talking about exchanges. And I've said within those exchanges, for instance, for the very first one, we do have the New York Stock. Oh, sorry, we do have the New York Stock Exchange. We've understood what it entails. Okay, so we come back out here. We said we have the Euronext. So out here, we're trying to understand whatever the New York Stock Exchange is. You can also come and type in Euronext. So here, it's the European Stock Market Exchange. So here they're saying, let's just come out to this one. They're telling you Euronext or N.V is a pan-European boss that provides trading and post-trade services for a range of financial instruments, traded assets, including regulated equities, exchange-traded funds. These are ETFs, warrants and certificates, bonds, derivatives, commodities, foreign exchange, as well as indices. You understand? But then for the Forex that we trade uh, within the foreign exchange market, in most cases, it's usually within the Chicago Board of Trades, where we have the CBOT, then we have the New York Mercantile Exchange, and then we also have COMEX. So I don't want you to get confused. remember the structure that we're trying to talk about. We say we have exchanges at the helm. Okay. So after the exchanges, I said we do have what we call an investment bank. You're trying to understand what the overall structure of trading does entail. From the investment banks, some investment banks can stand in as liquidity providers for extremely large firms. However, within the foreign exchange market space, you could have individual liquidity provider companies, liquidity providers or provider. Then after that, we do have a broker. Then we do have you as a retail trader. You understand? If you remember from the previous class, we talked about the various participants within the market. So when we're talking about the retail trader down here, we're talking about the retail trader down here. Sorry, this is retail, not trader. When we're talking about the retail trader, oh god damn. So we're talking about the retail trader down here, we are talking about those participants we looked up into within the foreign exchange market space. To give you a recap, people like these guys, okay? People like these guys. So we have businesses, investors, governments, investment banks, and retail traders. All those people may, in this chain, try to fall under this bracket of what you're trying to term as a retail trader. So these guys, you have your positions, you have to pass your positions to a broker. The broker will have to fill in those positions to, let's say, a liquidity provider, because they have to be in position to move, various prices. You input an order or a trade order into the market, then it's driven through a liquidity provider or an investment banks, then it is later on monitored by the bodies, which are the exchanges. Okay. The commonly known ones that you might get to find, um, the common bodies that are governing, because with the whole forex trading thing, uh, there has to be some level of governance, or some level of, how should I say, some level of some law, okay, so that people's money is not, taken advantage of. You have to have protective bodies. So one of the bodies that you guys might get to know so much about are the bodies within the US, where we have the CFTC. It's called the CFTC. I think it's the Commitment or Traders Commission, something like that. And it is under the Chicago Board of Trades. So this is under the Chicago Board of Trades, or CBOT. So within our overall analysis, we'll get to look at some of the roles that the CBOT gets to play, or the Chicago Board of Trades. We'll get to realize that actually this is the Commodity Futures Traders Commission, something like that. I don't really remember the exact full the exact full meaning of these initials, but it's the body that governs most of the markets within the US. So it regulates all those brokers within the US. If there's anything that's happening, like let's say manipulation, anything wrong that's going on within the market, that body is really responsible. So it is under the Chicago Board of Trades, and usually they release what we call a COT report, which we'll get to look into and what it actually means as we proceed. I'll make sure that you guys get to understand that, because it's really important. Most of these things people rarely talk about them, but you really need to know the overall structure before you get to proceed. Okay. So coming out here again, we're looking at the people that own the market. So we have the exchanges at the helm. Then within the exchanges, you're going to have those other guys that I've been trying to talk about, the investment banks. Why? Because we need liquidity for positions to be filled within the market. You understand? Liquidity is literally whatever moves the market. There has to be various orders within the market for certain positions to move. Okay. If you're to buy, there's going to be a couple of people that sold that you'll be taking money from. Okay, so that's some sort of like liquidity. The liquidity can be in form of orders, it can be in form of orders like stop orders, or stop loss orders, you know. Then we could have entry orders. There are various entry orders. We could have sell limits, could have sell limits. We could have buy limits. We could have buy stops. We could have sell stops. All these are orders. So as long as you're not on the right side of the market while placing any of these orders, you're going to be someone else's liquidity who is on the right side of the market. And what is which people are responsible for collecting these orders to generate that kind of liquidity so that the market can move? The people that have the much more amount of money. So those are the investment banks and the liquidity providers. Okay. Yeah, so to proceed, just to maybe give this brief description, these are monopolistic and duopolistic structures. They may lead to protectionism and maintenance of the status quo. So, like I said, these guys could at one point in time decide what's entirely going to happen with the market. They may not necessarily do it in a direct sort of way, but they could, by influencing price in a given direction, especially during news events where most people might look at it and say, there's manipulation. Now, for a beginner right now, you may not understand most of those things that, there could be some sort of like manipulation in the market. But in case it ever gets to happen, it can only be done by someone at the top. You understand? Retail traders may not necessarily be in position to move the market or, so to say, manipulate the market because they do not have that amount of money. But the exchanges could be in position to do that because they are the helm. The investment banks could be in position to do that because they are the ones that provide the liquidity. A liquidity provider, can also be in position to do that. You understand? Because they're the guys that offer you with the prices within which you're going to be using to enter the market. The various things like, let's say, straight to the process trading, whereby your orders are directly taken into the market. We'll get to understand most of those things as we proceed. But as of now, the little bit of information that you need to have is that we have exchanges at the helm or governing bodies. Then we have investment banks. We have what we call a liquidity provider. You have a broker. Then you have you as a trader coming. Like I said previously, if anyone within that chain is missing, it might be extremely really hard for the foreign exchange market to coexist. You get all those things have to move in tandem for things to flow out well, for you to place trades and be positioned to make money from the market. Hope I'm understood. So just to maybe proceed, what I was trying to get into, to give an example of what you're trying to look at as protectionism or duopoly or monopoly. If you have a company like Coca-Cola, so Coca-Cola can at what point in time determine what price you're going to be in position to buy their drink. They can set up a specific price, within which you're going to be able to buy their product. If it wakes up one morning and it says our product is $1, you can't be in position to get that product at any other price as long as it's a Coca-Cola product, unless you have that $1 to pay. Okay. So usually people who set prices within the market may be termed as monopolists. You understand? So at a certain point in time, these exchanges or investment banks or liquidity providers could at one point in time get to influence price. By doing that, they stand as monopolies, literally doing what we call protectionism or maintenance of the status quo. So they can control the market if they want to. You understand? So we have what we call the Jackson Hole Symposium for market condition discussions with members like the current chairman of the Federal Reserve Committee, that is Jerome Powell. Within certain times where we have, let's say, a speech from the Fed chair, that's Jerome Powell, occasionally you're going to be seeing markets move extremely aggressively. It might be confusing right now for an extreme beginner. However, some of these things you're going to have to understand and get to look at a later stage. So where you get confused, you should always remember that this guy maybe probably talk about something like this, and yeah, it will now click. start seeing things make a whole lot of sense. Okay. So when we dive down again, looking into trading software or what we call online trading websites, what are the websites that a beginner might need to start, going into trading? So we do have what we call tradingview.com. And what tradingview.com is, this very software, this very interface you see me writing on, is a charting software. For instance, I had marked up this trade. Last week we had an FP, the analysis, looking out for shorts and everything. But now looking at coming into next week, this is the anticipation that we could possibly have a trade drop slightly down here, then maybe buy. It could buy a little and continue, or even buy and reach into this area. So by me doing all this, I'm literally analyzing my market. You understand? To see what price is going to give to me within the next coming week. Okay. I could have various tools, for instance, these trend lines. We're going to be looking at all of these when you get into the next chapter of technicals or trying to understand price thoroughly, But as of now, this TradingView software is what helps us, analyze the market. We do have MetaTrader 4 and MetaTrader 5, but in this video, I'll focus on the industry standards, the best tools that you could possibly use, and TradingView is arguably one of those. Okay, so you have something like that. This is basically analysis. You're trying to see where price would possibly, reverse from or proceed from. For instance, within this overall area of price, once price broke this level, we expected a retest, then it proceeds to the upside. It could have continued all the way into this high. However, as long as we had a high here, someone could have expected price to drop on the downside. And as it dropped, it broke some level around here. So once it broke it, retested, then we had a continuation. So basically what we use TradingView for is charting or analyzing. Okay, this is a chart. Okay, so this that I've done on this chart is basically called charting. Okay, charting as in with a chart, not chatting, texting, charting like this, or analyzing. Okay, analyzing the market to predict your next move. Right. So that is TradingView. Then we have MetaTrader 4 and MetaTrader 5 PC and mobile versions. We're going to have a section whereby I'll be breaking down how to place a trade, onto your demo account, uh, onto your TBS demo account, or when you, because you may not necessarily be recommended to start trading right away. You have to practice in a virtual environment, understand what you're doing, and once you've understood what you're doing, then you could possibly proceed uh, to get an engagement within the live market. All right. So with this, you need MetaTrader 4 and MetaTrader 5 PC and mobile versions. Then we do have what we call investing.com. So investing.com is basically a website. So you could see as I type in, it's already here. So I can just click enter. Then I do have my website out here. So what does investing.com help me? It helps me get to understand, whatever news events are happening within the week. Remember when we talked about analysis of the market within the foreign exchange market, the various forms of analysis we use. We have technical analysis, we'll be looking into it. We have fundamental analysis. So for fundamental analysis, we always need that this website that is investing.com, or another one is firstfactory.com. So what we usually do, we as traders may in most cases uh, be interested in trying to look at what we call the economic calendar. So I could always come out here to the economic calendar and identify, what are the coming, what are the, what are the, how do you say, what are the news events that are coming within the next week. So I could always come and check them out here, understand which ones are coming in within the week, then be in position to, take them into consideration as I trade. So you could also come out here. Right now I'm in East Africa, so I might change my time zone to, let's say, Nairobi. So it's going to give me, the news event. So currently currently right now, there's obviously no news events. So if we go to tomorrow, you could see some of the news events that are going to be coming in tomorrow. You understand? So depending on the time within which you trade, you could always wait out for the most key important news events and be in position to protect yourself within your trading. Okay, so for a person like me, I trade a session that's the New York session. I would come to this section where it's within the New York session. It usually starts within, let's say, 15:30. So at this specific point in time, there was no news event at 15:30, but this is the time where I'll be looking out for news events. So what is trying to tell me that maybe tomorrow there may not necessarily be a high impact news event. So you may not so much be worried as to what might happen in the market. And aside that, we do have another one that is forexfactory.com. So aside from investing.com, I may in most cases use investing.com on my mobile software because it usually gives me those updates immediately. You know, before the news event comes out. Just looking at mere news, let's say delegate from the US went to visit, let's say China for some talks or anything. I always get that pop up on my phone. But then we also have another one that is forexfactory.com. And as you can see, I already saved it here as a bookmark. So I can click on forexfactory.com. So if I click on forexfactory.com, it also gives me the same thing. You know, you have all these insights from very many people, and then you have here it's showing you the news. You could have uh, literal news if you want to just look at the news. Then you can come and also look at the calendar. So as a trader, in most cases, you're always going to be concerned with looking at the calendar. Okay. So here it's telling you from September 3rd to September 9th. That's the next coming week. All right. So as you could see, uh, this Sunday there's literally no news event. So on Monday, similarly as we had seen the other side, there are more or less the same news events. The other one could have quite a number or more. But what you're usually looking out for is for the news events that are in red. This one will be covered thoroughly when you're looking at fundamental analysis. All right. So as of now, we are basically looking at uh, just the overall interface. We may not necessarily go deeper, you know. But what you're trying to get to understand here is that if we have any significant news event, let's say for Forest Factory, it's going to be denoted by a red color or a red folder, you know. So anything that has red, that necessarily means that that's a high impact news, and you should really be wary for it. Then the next color that could be a little bit impactful could be this orange color, quite next to red. Then once you have orange, you could have like let's say a yellow folder. Yellow folder is also a little bit something that someone can refer to as low impact. Then we have this non-impact are the ones that are usually in gray. So red, you're always going to know that that's high impact. Then orange, medium impact, yellow, low impact, then gray. So it's going to be a non economic or literally less impact or whatever. So coming out here back again, those are the trading softwares or online trading websites that we use. TradingView, basically for charting, you analyze the market, identify the next direction which price is going to take. Then you would have MT4 or MT5 PC and mobile versions. You know, this one is basically going to help you to place your trades. We'll be looking into it. Then we have deeper. Then we have investing.com, more of like a news, you know, website or economic news website within the economic calendar. And same applies to Forex Factory, right? So we leave that to get to look into the very last one, that is choosing a broker. So I said within the chain of trading, you need all these guys for you to be in position to participate within the market. All right. So we do have exchanges. We looked at them. We had investment banks. We have a liquidity provider. So you now have to choose a broker. The liquidity provider may not necessarily be the one choosing because your interaction usually ends at the broker level, you as a retail trader. So you would have to be in position to choose a trader Then the trader completes that chain for you all the way to a liquidity provider or an investment bank. Then the investment bank you're using may, necessarily proceed all the way to the helm where you have the exchange. So, how do you get to choose a forex broker? The very first thing that you need to understand to choose a forex broker is they have to be registered. Okay, they have to be registered. Then, secondly, you have to look at their customer care service. If you try to reach out, let's say you opened up an account, are they willing to help? Like, try to talk to you? Are they willing to guide you? Are they willing to give you any form of guidance? For instance, with Tamam Broker Services, right now you guys are learning from me, and that's a service that the TBS or Tamam Brokerage Services customer care is trying to provide to you to give you deep insights, regardless of, uh, you know, regardless of whatever might happen. So we're giving out all this information entirely for free. So this is part of the customer service, customer care service. Okay. Then transaction costs, these ones you'll get to understand as you proceed deeper. You will always want to weigh out and get to see, does broker, let's say broker A is TBS and broker B is another broker. So you have broker B and you have Tamam Brokerage Services. So broker A. So with the transaction costs, if the transaction costs of broker B are way worse than the transaction costs of broker A, which is Tamam Brokerage Services, then you would want to choose Tamam Brokerage Services because we do have extremely low transaction costs in terms of spreads. Then the security could be by FSCA, CSEC registration. They should have a great website and platform. So when you come out here to the Tamam Brokerage Services website, so it's right here. Once you click onto it, so you could look at the website. It's entirely user friendly. Okay, so these are some of the things you always have to look out for. Does the broker have a website like this? If it does, then you should really be good. Uh, you should really be good to go. Okay, then the legalities are here in terms of regulation and all those things. You understand? Rights reserved, Tamam Broker Services, 2023. Okay, so the website is quite user friendly and it's easy to navigate through. Okay, so you have all these things within the website, the about, products, TPS funding, partnership, account, support, education, login, register. So you just have to come out here after having selected the TBS as a broker of your choice, depending on the things that you've seen, the customer care service. Then you come out here and you proceed with registration. Input your email address, uh, then you confirm the password, then you confirm and log in. I already have an account, so you could always do that on your own. You input your email address, input your password, you confirm your password, then you proceed. Then it will bring you to a page whereby you'll have to input your real name. So while opening up this account, you need to have a valid national ID, and the names of your national ID should always match with the names you're going to input it to register for the account. Okay. So that marks up the end of our very first episode of the beginners, our very second episode, the beginner series with the Tamam Brokerage Services Forex course. So I will most definitely get to see you guys in the next one. Don't forget to hit the like button on the video and don't forget to subscribe to Tamam Brokerage Services so that you can receive more of this, extremely great content. So in the next video, we'll be looking into something quite different. After you having selected the broker, then what next? Okay. Yeah. So see you guys in the next one and have a good day.